I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen, his website, thegoldandOilguy.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Crude oil still buzzing around the $45 mark. What do you think is going to happen?
Yeah, well, crude oil broke down from a really significant price channel support trend line that you and I talked about last, and that was up when crude oil was trading around the $49 per barrel mark. And if it was to break and close below there, we are going to see $43, $44 hit pretty quick. And really, we saw that unfold within 3 trading sessions. We saw a big washout low earlier this week, where in overnight trading or pre-market trading, however you want to call it, we saw crude oil go into free fall mode down into the $43 mark, and it recovered and rallied before the market opened. So, down at that 43, 44 mark was, the kind of the prime entry of an oversold level that should trigger a knee-jerk reaction bounce and a washout low. And it's exactly what happened, but the markets tend to have those way to make sure the majority of investors miss it. So it did it in pre-market, meaning anybody who trades equities or ETFs really couldn't take advantage of it. It was something that the market did through using futures and kind of made it so the average trader couldn't take advantage of it. But we hit this significant level, and right now we're looking at crude oil putting in, I think we're going to see some pretty extreme volatility. We could fade back down now and test the high $43, $44 per barrel mark over the next couple of weeks. I think we're going to see some pretty choppy market for crude oil, very similar to what we saw back in March. And we've seen this similar type of price action happen back in November. And these patterns here, this type of sell-off with this high volume and these critical levels being broken and support levels being touched, it should form some type of little consolidation. It'll be a high volatility consolidation, but once it creates its boundaries, its perimeters, it's going to set us up for another good trading opportunity. The last one was back that we saw in March, created this extreme oversold condition, and we talked about if it breaks to the upside, we're going to see it run to the 53, 54 mark. If it breaks to the downside, we're going to see it go to the 43, 44, and it ended up breaking to the upside with a nice clean break, and it rallied for a couple of weeks and hit that target. And so that's what we're looking for now, is just another one of these setups. This is extreme price action in crude oil, and it's going to take a little bit of time for the market to heal, and then it's going to have another break. And so we're just kind of waiting for that setup to unfold over the next week or two.
Some folks have suggested that oil isn't being consumed at the same rate it used to be because even though people bought SUVs like crazy, these are now fuel-efficient vehicles.
Yeah, I think that plays a part in it for sure. Obviously, everybody's streamlining machines to run better, run more efficient. It's huge. I just bought myself a truck, and I can't believe the mileage you get on it. And 10 years ago, it was a very different story. So, obviously, there's a decrease in when it comes to driving, probably in demand for the actual amount that automobiles consume.
Is China still sucking up a huge amount of crude?
I don't really follow it too much. I'm sure they are. I think they're growing, and obviously they've got a ton of people over there and automobiles. So I would think so, but I don't really follow that too close. If we kind of look at on a different angle here at the more technical, the leading indicator for crude oil, the energy sector ETF, the XLE, has been really in a downtrend really since December. And it's in a very tight falling channel, and it has fallen all the way down into a very critical support, high volume support trend line that technically goes all the way back, back into May of 2016, so almost a year. And so it's fallen right down to a critical support zone, and we're seeing some pretty big volume starting to move into the XLE. Now, it's still in a downtrend, just like crude oil, but it looks as though, we could see crude oil form a little bit of a consolidation. So, same with the XLE, and I think there's a good chance we're going to start to see the energy sector start to rally. Obviously, we need both of those to break to the upside, but overall, the markets are setting up for potentially a very significant low for crude oil and energy stocks, I think, going forward the next couple of weeks.
We'll have more with Chris Vermeulen right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with the price of gold? It seems to be slipping a bit.
Yeah, gold is, we kind of been expecting it to be under pressure, and to be under pressure for still another almost 3 months from now. I think we could continue to see this downward selling pressure in gold, silver, and miners for, until the end of July, more or less, which is when I think the equities market will probably hit a significant top, and then I think the tables will turn. It'll go risk off to risk on, meaning people get out of the risky plays, equities, and they start to move into the risk off assets like precious metals and bonds, things like that. So, you look at gold, you look at silver, which has just been an incredible decline in value, and gold miners, they're oversold. They've had a huge move down. They look ready at any time for a knee-jerk reaction bounce, but that's all I see. All I see is a bounce or just a pause at most. And then I think we're going to continue to see downward pressure. We could very easily see gold test the December lows, which is way down at 11.30, 11.25 an ounce, which is pretty far from where we're at today. Silver is almost down to to that December low, and silver's got potential. Silver doesn't quite move the same as gold and miners. It tends to move a lot more and breaks more significant pivot zones. So I think we could see silver continue to slide past the December lows and go all the way down to the 15, potentially the 14.50 area per ounce. And right now we're trading at 16.10. So there's a lot of downside, I think, potential for things to still slide. That being said, everything is a little overdone to the downside. It's oversold, meaning we should get some type of bounce or a little more of a pause here, I think, before too much more selling takes place. But, that's all it's going to be. So the precious metal sector, I'm still bearish, and I think I will be for quite some time until we see maybe these lows start to get tagged, and if we see some big volume stepping in, it might be an opportunity to stick a toe in the water and see if we can pick a little bit of a bottom here. But other than that, I think the play is to focus on potentially playing the downside or just staying away from the precious metals until more or less the summer.
Did people think gold was going to be a major player because of the Trump factor? You didn't know what he was going to do, and if you don't know what he's going to do, you can't predict the markets?
Yeah, and I think that's one of the reasons why gold outperformed and did so well over the last couple months, really. Ignoring this recent sell-off that we've had, pretty much, Trump got into play here, and gold started to climb that wall of worry. It started to have a nice rally, had some minor pullbacks along the way, but we started seeing all these, there was a lot of worry starting to creep in, and wars and missiles, and we kept seeing gold continue to hold up and creep up, even though silver and gold miners were selling off, and that was definitely a fear-based play. People moving into gold, and gold will soar during times of war. So obviously that really helped hold it up. But now it's starting to dissipate and break down and pick up speed with some pretty decent selling volume. I kind of feel as though we're going to need a big event, I think, to kind of spark gold to really take off again at this point. I think right now it's going to continue to kind of fade out of favor, and that's what we want. There's nothing wrong with it consolidating back down to those potential December lows, or hopefully it doesn't quite go that low, but for it to fade back down, all it's doing is kind of building a base and letting the market consolidate for a much bigger move later in time.
We'll have more with Chris Vermeulen right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, at last weekend's Metals and Minings Conference in Vancouver, a lot of Americans were up in Vancouver looking for bargains in the mining sector because of the difference in the currencies. Is that a big factor right now?
Oh yeah, for sure. Like, you look at the currency conversion. It's it's almost $1.40 exchange for us Canadians to get a US dollar. It's with the exchange fees and things, we're looking at almost $1.40, which is huge. We haven't seen that in a long time, and that makes it really expensive to do anything in the States. But you look from the other side of the border over, you look over into Canada, and you're like, holy cow, look how cheap we can buy stuff. We can get 40% discount over there. So there's a lot of money, a lot of people coming over here buying up things. You look at gold miners, mining companies in general, Canadian ones, and obviously you can buy them on the Toronto Stock Exchange. All these companies, you're getting a huge discount in value for just because of the currency exchange. So there's huge potential there. And if crude oil, or when crude oil finds some type of bottom and starts to rally, the Canadian dollar will rise in value. So, you look at Canadian stocks, it has great potential for two significant reasons. And the one being, I think precious metals long term are going to do really well in due time, just not right away. So naturally you should see stocks start to rally. But on top of that, crude oil should eventually put in a significant bottom. Crude oil will rally. The Canadian dollar rallies, more or less shadows the crude oil prices, which means the share's value, its currency, goes up as well. So there's potential there for a double play. And I think the biggest commercial net short position in the market right now is actually commercials are net short the Canadian dollar, and it's hitting an extreme level. That was just this week. So, it just goes to show potentially the Canadian dollar could be bottoming out here in crude oil. We could start to see a rally and see that 40% currency exchange start to vaporize. So it's a great opportunity potentially for a currency play. That commercial net short position is kind of screaming contrarian play, indicating that we could start to see the loonie rally here.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Questions for our guests or for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.